All right, everything looking good. We are live. Somebody let me know in the chat everything is coming through loud and clear. I would greatly appreciate it. But in the meantime, go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on September 18th, 2022. And like always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so we've got our daily and weekly close on Bitcoin and cryptos. Got quite a bit to talk about this week. So we are actually going to be focusing on our weekly closes. So obviously, we just saw the end of the week close on the stock market on Friday. And then obviously now we have our crypto weekly closes as well. So we want to take a close look at those. We know this is a big week, obviously, for the Fed meeting, Fed funds rate hike. And we are expecting a 75 basis point hike. Anything less would be a surprise bullish. Anything more would be a surprise bearish. And arguably, you would assume that the market has priced in 75 basis points. So, that outcome would be neutral. Now, how does the market react off of that? If we are expecting 75 and we get 75, does that mean we rally? Does that mean we go down but not as fast? I mean, that's all up to you, how the market reacts. But, if we know what they're pricing in, it gives us a better idea what they're expecting, whether or not we would see a surprise. So we're going to focus on our weekly charts here. We're going to start with TNX and DXY. So the most important thing to look at here is this is the bottom from March of 2020. And this is our current candle right here. And obviously, we closed our weekly candle last week at the cycle high. So not only did we close at the highest wick we've seen yet, basically, but, we have a full big body candle. So it's not a blue sky breakout because we have previous price action behind this, but it's a new cycle high. So as long as we're putting in a new cycle high, as long as we're closing higher weekly closes than any other time in this rally that's lasted for the last couple years plus, and everything else is postured bullishly. I mean, just write down the list on the weekly. The histogram is above the slope line, and it is blue. That's as bullish as it gets. We just got a hard buy signal, and then we see our stochastics and knife are all positioned in the most bullish fashion. And then our moving averages, the 8s above the 21s, above the 200 exponentials, above the 200 simple, and they're all sloped to the upside. That's as bullish as it gets. So there's really just no excuse for us to not be just massively bullish on TNX. And we know as long as TNX is super, super bullish, we know it's impossible for the market to have any kind of sustained bullish sticky rallies. So now we're going to look at DXY, the other half of the tag team. And again, we didn't bottom at the exact same time on DXY and TNX. But the most important thing is, again, when we're looking at this on the weekly, we have everything looking good. We're above the slope line. It is blue. Now we are seeing a little bit of weakness here on the histogram. And again, this is our weekly chart. We have a hard buy signal. We're in the bullish control zone. Everything is angled to the upside, although we are seeing a little bit of weakness here. And then obviously our weekly close was once again a new cycle high. So the entire way up here, this is the highest weekly close we've had yet. So unless you're in the, business of calling tops and you're really fucking good at it, I don't think it's a great idea to just assume the dollar has topped out with that super bullishly engulfing new cycle high weekly close. But again, lots of people calling the tops and just consistently being wrong. So it makes sense that they would just stick with their guns and just wait for that one day when the, broken clock's right twice a day type situation. So we know, obviously, the reason we look at those two every day first, right off the bat, and they're so important is we know that as long as TNX is rallying, as long as DXY is rallying, as long as they're making new cycle highs on the daily, the weekly, or the monthly, especially all of those things, there's no reason to just assume they're going to turn around. Therefore, it's going to be very difficult for any risk-on assets to rally. So now let's look at the weekly on oil. And I think people are losing track of what's happening on the long time frames and getting caught up with what's happening on the daily or 4-hour movements. Those are still very bullish. So U.S. oil, we had the 821 cross weeks ago. We're consistently putting in new lows. We closed new lowest low this past weekly close right here. You know, the administration's trying to say they're going to start reloading the strategic reserves below $80. We don't know if that means at $10 because that's below $80, or if it means at $79.99. We don't know. As far as I'm concerned, there's no floor under oil. There's nothing like that. I know that's what people are saying. You know, it's all BS. There's no floor under oil. There's no government put on oil, etc. We're in the bearish control zone. It's all red histograms. We're putting in lower lows consistently, week after week after week. Bearish cross on the 821. The most realistic or reasonable thing to assume is that we're coming down to $71.50 to retest the 200 exponential. We have obviously support here at 84. We have support here at 75. We have support here again at 66. We have the 200 at 71. We have the 200 simple at 63. So this is why, you know, basically slinky theory takes place. As we step down here, we're consistently getting to more and more support. So as we hit key support levels, we try to push back up, we get rejected. Then we go down and test the next support level. So I'm expecting somewhere around like 76 or so in the next couple weeks. And then again, we step up here. Anything could change fundamentally or technically. I'm still very, very bullish on oil. The 200 exponential is above the 200 simple. That's very, very bullish on a weekly time frame. But right now, the 8 and 21 are bear crossed. So we're in the middle of a retracement in an overall macro bull trend. And the likely target of that retracement is the 200 exponential or the 200 simple. At any point in time, this can just reverse to the upside and just switch to bullish. And that doesn't change anything. It just means the market is in such a hurry to buy the dip on oil that it's not getting back down to its support, that people are stepping in ahead of time to make sure they don't miss out. And that's okay. That's good. The stronger, if we just rally from here and go to new highs, that means oil's really strong. If we go down to the 200 exponential, still strong. If we go down to the 200 simple, still totally strong. But the sooner we rally, the higher the low is, the more bullish it is. So we'll see how it works out. But right now, this chart is technically macro bullish, but we're in the middle of short-term bearish momentum to the downside. So it makes sense to me on the weekly that oil would continue to put in new lower lows until it doesn't. It's been consistently putting in lower lows. So until it doesn't put in lower lows, I'm not going to get bullish on oil. I'm just going to assume it will continue trending to the downside. I will ignore any talks about floors the same way that those same people will ignore any talks about bubbles, I'm sure. All right, so let's go to Dow Jones next. So Dow Industrial Average, DIA, we're looking at here on the weekly. Again, very, very strong bull trend. Been a long-term bull trend for weeks. 821 crossed back here months ago. We've been bearish ever since for a short to medium-term correction. We got the initial bounce off the 200 exponential as expected. Keep in mind what we were just looking at with oil. Would it make sense for oil to do the exact same thing the Dow did? Probably, because most charts act the same. And then we bounce the 200 exponential. We get a nice push up here, rejected. Look at this weekly candle we just had closed. At the end of the week, people were actually bullish because we closed off of the lows. Now, granted, it's better than closing at the lows, for sure. But there's no way at the end of a week that closed, and this is our weekly candle, you could possibly be like, oh, well, we rallied for the last 10 minutes of the last day of the week. So that's pretty bullish, right? Well, this is the rally, and this is what the rest of the week looked like. So for me, this looks more bullish than ever. I mean, we got a clear rejection right here, failed to cross the 821 bullish right there after getting so close. And then we had two disgustingly bearish candles, one bullish dead cat bounce, and then the most disgustingly bearish candle after that. So in my opinion, looks like we're headed down here to the 200 exponential. You guys know really what I'm looking at is the double bottom and the final test of the 200 simple. Now, what happens when we get there? We probably get another bounce. But does it just end up being another lower high? Does it end up being a higher high? Do we rally from here to new highs? Do we break straight through it and, you know, start trending to the downside aggressively? We don't know. But we see a clear rejection of the histogram on the slope line, and that's a very reliable rejection. We see a clear rejection of the 821 bull cross, and then we see the stochastics are rolling over here. We have a very, very bearish candle. We're clearly in a downtrend, barely bouncing the 200 exponential. So when we do get down here to 200 exponential and simple, while I would expect a bounce, I'm just going to expect another lower high. So where was our last high at? The last high was at 338. So I would expect a lower high than 338. So you're like, well, 337, that'll cross this. Well, I mean, somewhere in between here and there. We don't know exactly where, but I don't think it's going to see a 10% bounce here. As the last time we got a 10% bounce, each time we're probably going to get lesser and lesser bounce until eventually we rally to the upside or we fall through the moving averages. And right now, it looks like they want to fall through the moving averages. This week is going to be crucial for the monthly, because this monthly candle is disgusting. It's another rejection candle, and this is going to confirm on the Dow Jones the 821 bear cross. And we have 12 days left for that. So we basically have this full week of price action, then we have the weekend, then we have a partial week, and that's the close. So if this weekend we had the Fed funds meeting basically on like Friday, Thursday or Friday, at the end of the week, we know that's the majority of it gone. We're closed on the weekend, so we literally have a handful of days after that. So if all week is just flat, let's just say best case scenario, it's just flat all week, and then we get a 75 basis point hike, and then the market rallies off of it, we have basically the next week, like 2 days, that this needs to rally back up and get back above 323. So if we're at 308 and we need to get back above 323 on a monthly close with basically a stale week, as far as I'm considering this week, I don't expect a bunch of price action, and then expect a 75 point rate hike, which the market expects too. So then we rally off of that. Is that going to be what amounts to like an 8 to 10% rally? No, I really don't think it is. I mean, we spent 3 weeks here now, 3 months, I'm sorry, here now trying to cross us back to the upside. So I just don't think that's going to happen. Now, if it does, if we close above 23, 330, somewhere around there, that's good. That looks good. We stopped the 821 cross and buy ourselves a little more time. Eventually, one or two things are going to happen. We're either going to get the cross and it's going to be really bearish, or we're going to save the cross and then, start trending back to the upside. Right now, it seems more likely we're going to get that cross. So everything is lining up for basically a sideways week, a 75 basis point hike, and then, let's just assume the market rallies off of it. It basically has like 2 or 3 days to rally up before the end of the month. And it needs to rally, the Dow Jones needs to rally roughly like 6%. So 3% a day for like 2 days, or 2% a day for 3 days. Is it possible? Sure, but it doesn't seem probable right now. And we know, obviously, the number one thing we look out for is when the 821 crosses bearish on the monthly, because we know that was the 2000 crash, that was the 2008 crash, that was the Rona crash. So anybody that says you can't predict these big crashes before they happen obviously doesn't understand our strategy. So that being said, the Dow Jones monthly looks very bearish. The weekly looks very bearish. And then, obviously the daily, it was like, oh, we, gap down, and then it was like, we rally back up part of the gap. So bullish. It looks very, very bearish right now. So, the dailies look okay, but I think that's throwing off what people are seeing here. So SPY, very, very similar. S&P 500. Again, we failed to cross back up here. We have a clear meltdown candle, just bearishly engulfing, and then Stoch's rolling over, histogram rejection of the slope line. And again, it looks very likely, in this case, the 200 exponential is basically in the same spot. If we retest the 200 simple, that's a new low on this. On the Dow Jones, it was basically the same low. So I do expect a retest of 357, some kind of potential double bottom right here. Now, I'm not going to just flip bullish because we retest it, but we would expect the market reaction off that level up to a new lower high. So, you're like, well, which one is it? Are we bullish or are we bearish? Well, if the market does what I tell it to do, like my little bitch, it will go down 7% first, and then after it goes down 7%, then we'll see that rally back up, 10, 15%, something like that. So we'll see what happens, obviously, but very, very bearish on the weekly here. It looks absolutely atrocious. And then just remember, we have basically that 10-day countdown. Well, I mean, technically it's 12 days, but 2 are weekends. We have that 10-day countdown to the end of the month. So same thing, very, very close to a bear cross here. We need to get back above like 405, no, about 408 maybe. So we need about a, $23 rally. We'll see what happens. We will see what happens. I think it's going to be very difficult to rally leading up to the Fed meeting, because I don't think anyone is expecting a 50 basis point, and the 75 is priced in. So if we get 100, which I don't think is likely, but if we do, we would expect the market to dump, because it would have to price in an extra 25 point rate hike, which would drive down bonds, stocks, pretty much everything risk on. If we get the 75 and then the market digests it, Powell says some like super bullish stuff, and then, we rally from there, we could potentially stop this for one more month. But what are we doing though? Are we just buying time at this point in time? I mean, this was a clear bearish close below it. And then we have now 4 months where we couldn't get back above the 821. So does it seem likely we're just going to all of a sudden reclaim it and just start rallying? It really doesn't. And again, we know, this didn't even cross bearish with the Rona dump. It reverted so quickly. It was actually cross bearish and then reverted. So we have 2008 and 2000, and we're about to do the same thing again. So anyone that's saying this is not like 2000, this is not like 2008, we're not going to get a market crash, it's going to be an orderly correction, whatever, I would argue it's going to be as bad or worse than 2000, 2008, because in 2000 and 2008, at least the Fed had our back. That's not the case this time. So again, not trying to be overly bearish, but in my opinion, the markets are overly bullish. And what I see when I look at these charts, now I understand, people don't have TradingView or like the ability to look at charts that show like weekly and monthly timeframes. I get that. It only shows you like 15 minutes or 60 seconds or, 1 hour, 4 hour. I know sometimes for limited time only, you can have access occasionally on some platforms to a daily chart, but it's very, very uncommon. So a lot of people are not going to be able to see this because they just don't have access to the tools. And I mean, that's very important, obviously. So if you do have access to, daily, weekly, and monthly charts, I encourage you every once in a while, check them out. Take a look. Obviously, you guys do, but the rest of the world fails to. And remember, the same people that are like, oh, moving averages, technical analysis, that's all hooey-dooey. It's crazy. Shaking 8 balls and, looking for star patterns. Yeah, maybe. I mean, except for that we've been right about everything so far. So I think probably we'll just keep being right. But so QQQ on the weekly. NASDAQ. Same thing. Slightly lower low than the 200 exponential would just be a double bottom around 271. We really would need a close. I mean, this thing is looking brutal right now. Again, everything just rolling over. And then our monthly has already crossed down. So to cross this back up, we would need to close back above like 318. So we're talking about roughly like a 6% rally and just everything pointing down. I get it though. The dailies look okay. But do they though? I mean, bear market, 821 bear cross, headed back down to revisit the lows. You can't just trust one little thing that says we have a little momentum on a dead cat bounce. So weekly on the Russell, again, same thing. We already have come down to the 200 simple and below it. So on this, actually, it's not the same thing. We would be looking for a double bottom basically of, we would be looking for a double bottom basically at like 165 to hold. But this already is substantially more bearish than the other indexes. So the Russell is not holding up well. And now keep in mind too, a lot of people bought into this expecting small cap growth to lead us out of the bear market, assuming it was over. So when the selling picks back up, we would expect this to sell off much more aggressively because it will then get caught up. I mean, this thing led to the bottom with just straight dumps and just horrible performance over the last year plus. So it rallied a lot and held up okay since then. So if all of a sudden everything starts dumping again, expect this to dump more. The same as what Ethereum is doing right now. It's really feeling the pain because it had that nice rally. So now it's just got so much further to fall than all the other cryptos that didn't rally. So Russell just looks like trash, obviously. Monthly, it would need to be back above like 191. I mean, it basically needs a miracle. Let's be real. Okay, so that was all the... you know what? I did want to look at the... we'll look at gold weekly when we get there. So we talked about SMH, XLE. So we want to look at the weekly on energy right here. And I'm focused really on the weekly because I think it's painting a much more accurate picture right now than the daily. Because essentially what happened is we just got a pretty nice move up on the daily, started building momentum over the last month or two. And then we had a little sell-off and then a little bounce from there. So now people are kind of skewed looking at momentum and lagging indicators, and they're missing what's actually happening. So XLE here is looking very bullish long-term on the weekly. We have everything postured bullishly. We do see a small correction taking place. What we're really paying attention to now is our high, then our low, then our lower high. So if this is going to continue selling off, we don't want it to take out the low. If it does, though, it's going to be a great buying opportunity. So in my opinion, the 3 areas that I will be adding or that are ideal to add on energy, if you think it's going to continue being bullish, which this tells us on a weekly, it's going into a strong bull trend that likely lasts for years, if not decades. It's telling us we have a target of $68.40 for the double bottom. That'll be a buying area. And then it's telling us around 61. And then it's telling us again around 55.50. So we'll be looking to add or reaccumulate to this position, expecting this trend to continue higher. Now, if we break down from the trend, we start losing these moving averages, consolidating, they start acting as resistance instead of support, then we'll reevaluate and say, okay, look, this might be going lower, and our hypothesis or theory was wrong. But for now, still looks good. And again, that back test down here, those same types of levels, 65, 66 is the 200 simple. Now, could we get down here to like 57, 69? We could. I think it's less likely. We are seeing a little bit of exhaustion on the longer term time frames. On our monthly, we have a hard sell signal. On our monthly, we do have our first red histogram. Now, we don't want to overly get scared out by this move right here, because obviously the 8 and 21 are still bullish. There's a nice gap between them. We still have a ton of support underneath us. We basically have this massive support at 66, which is the 21 and the 200 simple, and then we have more massive support at 57, and then the whole time, basically we have support going back from 2015, this entire consolidation. So essentially what I'm looking at right here on energy, that to me is really important. We'll see what's about to happen to this chart as soon as I try to draw on it, because I can't remember what's on here. Well, we basically have this like super support / resistance level. This is essentially years of price action right here, just bouncing in that channel. And then we finally break down from it, and then we finally reclaim it, shoot through it. It's acting as support now. So it's not like, oh, if we go down any further, we're just back inside this channel, so we're going to go down. But, the deeper in this channel goes, the less support we have along the way. So we don't know exactly how deep it's going to go, but, somewhere around like the mid 60s to like mid 70s. Low 70s seems like definitely a possibility here. Again, still very, very bullish on energy, but short term, it's pretty clear it's going through some kind of correction as long as it's putting in that lower high. XLU, so still pretty strong. Now, this is a key level here as we have a top, then we basically have a double top, and we're back down here testing the neckline. So this is essentially an M pattern or just your standard double top. So typically what's going to happen in a situation like this is, once you put in, Once you put in, essentially a topping pattern like this, what you're expecting is if you break through the neckline, you're going to go from the top to the bottom of this measure move right here. So if we lose this area right here, which is our pretty clear support, that's what we're looking for the actual move to take place afterwards. So it could hold, and then, we don't worry about it at all. But if it does break down, the measure move would be just the distance of that actual move. And it would likely take us back to backtest this support at like $70. Now we have the 200 exponential and simple above that at 71. And those also line up to some of our other key resistance and support zones that we've been paying attention to. So XLU looks like actually what's going to happen here is this bearish divergence we were talking about is playing out. And remember what we said about this. This is the most reliable rejection signal we can get from this indicator. Now, obviously, nobody else uses this indicator. So, if other people are going to see this, I don't know, it's probably just mostly us, but there's a reason this happens. There's only so much data that these charts can output, and it's just a matter of how you're looking at it. So the way I have this coded up, the way I have these settings done is that when we get those back tests and the slope line is still that same color, when we get a rejection, whether it's bullish or bearish, it has very, very strong reliability for like continuation. So again, the momentum is rolling over here. We have clear bearish divergence as we put in a higher high here and a lower high here, a lower high here. So it tells us likely if we do come down to this level, which we're almost there, it probably does break. So this is going to be our key areas to watch is 71.50 on utilities and 70, at which point in time, I think people probably load back up on utilities. This is something, honestly, I see probably going into the future, just continuing to just be strong. Obviously, we're in this super strong trend right here. We are coming down to retest the 8, possibly the 21. We're still in the bullish control zone. We are looking at potential weekly bearish divergence here. If we do get one more red histogram here, if we do roll over and leave the bullish control zone, likely we have some longer time frame bearish divergence as well on the weekly. So, maybe we are coming down here to like 64 to retest the lows. We know we have really, really strong ascending support from that channel. And then the 200 exponential and simple on the weekly down here. We don't want to get too low here. 67 and 64 are like the danger zone. But again, we basically just have steps down here. We're basically at the white one now. If we break down through that, we have our 2 yellow steps. And then after that, it's the blue step with the ascending green support. And then our next blue step with the 200 exponential and simple. All key Fibonacci levels as well. So, very, very orderly sell-off likely to come in utilities. And then it's just a matter of when and where people swoop in to pick that up. As I do expect, utilities will continue to do well or do better than most other sectors in a bear market, or, the greatest depression, whatever the local, whatever the resident fear monger is selling today. I know it went from like recession to double dip recession to depression to the worst depression ever to the end of the world to the, whatever's worse than the end of the world, explosion of the universe. I'm not sure. I'll ask Neil. So XLP next, consumer staples, obviously an aggressive sell-off right here. Lost a key level. It is back testing it right now. So we'll see what happens here. This has not actually confirmed into a bear market yet. It had been holding up pretty nicely, but it's basically getting that confirmation as we speak. So that is not what you want to see from consumer staples. Implying that actually, like we've been saying this entire time, the consumer is actually not strong. There's a million things pointing towards actually no. The argument right now is that consumers are spending up all kinds of money on credit cards, and they wouldn't spend that money up if they weren't confident in the future that they would be able to pay it off. And, I guess that argument does make sense. When people are comfortable, they draw on credit, they extend credit, they over leverage, which is essentially what credit is. So that does make sense. But also they're forgetting there's an other side to that coin. The 2 times when people take on leverage, when people take on credit, is when they're, super, super bullish or super confident or super excited or optimistic about the future. And then also the opposite. When things are going to shit, when they're trying to just pay their bills, when they're just trying to get by, when they're in tough shape and they need to, nobody chooses to borrow money at like 12 to 20%, and doesn't pay it off every month. Like, of course, I have credit cards. I put, all my bills on them. I pay everything on them, and then I pay it off. I get points for it for travel or rewards, whatever. That's different. I'm talking about actual rolling balances. And right now, rolling balances in the United States on credit cards are at an all-time high, the highest they've ever been. So one of 2 things is happening right now. The consumer is either the most confident they have ever been in their lives with the future and how bullish it's going to be and how good it's going to be, that they're so confident that they just want to draw on as much credit as they possibly can, even while we're at like 10 and 12-year highs for rates and 30-year highs for various other metrics and whatnot. So while all that's going on, the consumer is either the most confident they've ever been or they're desperate. One or the other. Now, I don't know which one. I can only imagine. It seems like everything's going great. Land war in Europe, energy crisis, food crisis, terrible leadership, crazy, ridiculous decisions as far as, sustainable energy and human population going into the future. So, record high inflation. Does any of that spit like confidence to you? No, it's obvious what's going on here. People are over leveraged. They're over their heads. They don't want to lose their houses. They don't want to lose their cars. They don't want to lose their, lifestyles. So they're racking up credit card debt. It makes sense. It makes perfect sense. So, what is the next logical step? Well, people are going to start defaulting on this debt, obviously, at super high limits. So this is where the time capitulation comes in. Okay, it's a waiting game now. It really is time capitulation. I talk about that all the time. Price capitulation and time capitulation. People don't need to be underwater in their houses. That's why people are saying they can't be a real estate crash, because everybody has equity in their houses. Sure, that's definitely true. If you have equity in your house and you lose your job, or you don't have money to pay for your house anymore and you have to downsize, you have to sell, whatever, you sell your house and you don't end up upside down. So you don't get foreclosed on. So you're able to sell. That's fine. But it doesn't mean that it doesn't happen. It doesn't mean real estate doesn't crash. It doesn't have to be a wave of defaults for a real estate crash. Same with the stock market crash. We've already seen arguably one of the worst stock market crashes of the last 20, 30, whatever years. And it's been pretty damn orderly. Unless you're in those Cathie Wood stocks, unless you're in those cryptos, and even then it's been pretty orderly. So We'll see. We had talked about the potential of essentially like a topping pattern head and shoulder. We broke down once and we reclaimed it. So now it has this weird, super like low neckline right here. Not nearly as structured. But again, if we lose this level of support, it's very clear, strong support. So likely we head down to our target, which is the 200 exponential, the 200 simple, the key fib levels down here, the macro 382, and our yellow support as well, which was our previous high from 2020. So tons and tons of support confluence around here. 64 to 66 bucks. There's potential. This would just be the initial weekly retest of the 200 exponential and simple. So I would expect a bounce once we get there, but that's our target on the longer term to the downside. So again, not trying to paint like overly bearish pictures, but if we just look at these charts and see what the charts are telling us, this is not a bullish environment right now. So transportation sector obviously had that gap down. We've been talking about transportation forever, expecting this move, and now here we got it. The weekly chart is essentially losing the 200 simple, testing that double bottom right here. Looks like momentum is rolling over after our dead cat bounce off the initial 200 exponential and simple. There's a lot of support through this region where we chopped around here. So again, I would expect a very, very orderly decline. Lots of back tests if we do break down below here. But again, looks very bearish. Very bearish. But again, see on the daily chart, I mean, it looks bearish. No, never mind. This is a bad one. Some of the daily charts don't look bearish. This looks super, super bearish. And then FedEx, yeah, we only just looked at that one because we've been talking about that dump and then it happened. Okay, so that's all those bad boys. So let's look at the big players and then we'll take a look at crypto. I got a couple of requests. If anybody has requests too, put them in now and then we'll get to them at the end of the stream. I would appreciate that. What is going on, Parag? Good to see you. What's happening, everyone? What's happening with you, dude? Hopefully you're doing well. If you are here right now, make sure to smash up that like button. Toby, what's going on? Good to see you. What's your take on potential midterm election rally in November? Also, what's your take on Bitcoin never tapping into that 28 to 30K area? As far as potential midterm election rally. So the basis of that rally would be that the Dems will lose at least half of what? I mean, I guess you're assuming what? That they're going to lose half of Congress and then we basically like don't get anything done because we have a split government. Yeah, I could see that being a long-term bullish catalyst for sure. I think regardless, okay, basically, while the Dems control Congress, the House and the Senate, and the presidency, they're able to actually get stuff done, which is theoretically bearish for the markets. So the idea is that if the Republicans take back probably the House, and then maybe the Senate as well, we would have a divided government, and then they're less likely to get stuff done. Therefore, it would be bullish for the markets. I think that historically that is probably a safe bet. It's more likely, but we're talking about over like a 2-year period. I don't necessarily think it's like a sudden like 1 month, like end of month, or end of year rally or anything. I think it would be a long-term type situation. And right now it just doesn't seem like there's going to be that. I don't think that's enough of a catalyst to like have us rally up. And then as far as Bitcoin, we'll get there in a minute. We'll talk about Bitcoin when we get to it. There is a little gap down or whatever, but look, here's the thing. Okay. When you have a gap down, sure, gap downs always get filled. Most gaps get filled, historically. So if we have a gap down, all Bitcoin has to do to fill that gap is just 1 day return to like 30K. So it doesn't even need to go to a new all-time high. It just has to 1 day return to 30K. So if you're asking me, do I think that gap gets filled eventually? Yes, I do. I think at some point in time in the future, Bitcoin will be above or at or above 30K. Now, is that sometime on the way down right now? Is that 5 years from now after the most disgusting bear market shakeout ever? Is that, 10 years from now? I don't know. I do think eventually Bitcoin goes to 30K. I just don't know if it's going to be on the way down right now, on the way up to a new all-time high in 6 months or 5 years. So I'm not betting on it. But I do think that gap will get filled eventually, probably on the way up for our next bull market. Probably. But I do still have a bullish case scenario where we return to 30K. Matter of fact, we can just go do crypto right now. I mean, it's not like this isn't some super structured stream where we just have to do everything in order. We're fucking rebels, okay? We use swear words, we talk about controversial issues, and we just jump around, okay? So if you're part of the rebel squad, time to get down in the chat. Whatever that means. So basically, what you're looking at is when we drop down from on the futures chart, when we drop down, we basically had a gap between like 28 and 30K. I'm assuming that's why you reference that. Obviously, this is the Bitcoin spot market on Bitstamp, but you know, we know where that gap down was roughly. I mean, I could actually look, but well, I don't have to make excuses too. So anyway, so yeah, I have on this chart already actually some potential situations. Now, this was the potential situation we were looking at right here, where the two, you know, theories were that one, we already topped right here and that was it. Two is that we were coming back up here and that we were going to top higher. Now, once we came all the way down here to the bottom of the range, the probability of coming back up to the top goes way, way lower. Way, way lower. It's very unlikely now, after violating through that heart line or through the 821 daily moving averages, that we're going back up to the top here. Does not mean that it's not possible. Here we came down almost all the way back down for a double test. On closes, we had higher lows, but then we did go up again. So it is possible we do it now. I think it's less and less likely. The more time that goes by now, the less likely that becomes to me. I think more likely at this point in time, the 4 is in right here. That was in fact the top, like we were discussing. And we see how this white line that nobody else on planet Earth is using, because I made it up, okay? Because it doesn't actually count for anything. We see how this random white line of no purpose acted as resistance, and then we got rejected here. I think it's leading us down to our actual target, which is where we're expecting. Basically just come down here and essentially, you know, we came slightly short. We talked about it on last stream. We came slightly short of our multiple fib level confluence right here at 14.8. But realistically, I mean, I think we're coming down to like 10K. So it seems more likely than not at this point in time. Obviously, we're below the 200 exponential and simple on the daily. You know, we need to go over here and look at the weekly on Bitcoin too, and just remember what that weekly just meant. Just remember what that weekly is. Because again, everybody was like, oh, we're rallying, things aren't that bad. I mean, we literally just sold off a bearish engulfing weekly candle and closed down at the lowest lows of the entire cycle. So we were never lower than we are right now. Right now, we're the lowest we've ever been based on weekly closes. After losing key support, both our 200 moving averages, after backtesting the 200 simple, couldn't even get to the 200 exponential, got rejected by the 8 and didn't even get to the 21. And we're at the lows. And it looks like the stochastics are rolling back over bearish again after that pathetic bounce. This doesn't look good to me. I mean, there's a bunch of green histograms, so that's okay on the weekly. But I mean, that's it. I mean, everything right now is just pointing me towards like 14K, possibly 10K. Now, again, is it going to be an orderly decline? Do we get, you know, just capitulation move down and then a reaction rally back up? Do we just continue to consolidate for the next couple of weeks? I mean, I don't know exactly what's going to happen, how it's going to happen, but everything tells me that there's a very high likelihood we're going to 14K and probably 10K. The truth is right now, as long as we're holding above 20K, there's still like that glimmer of hope that it's like, well, on a long enough time frame, based on candle closes, we've still never come down and taken out our previous bull cycle high with a close on a long enough time frame ever. So that's still an argument for now, because every other argument's been destroyed. And now we're closing consistently below the 200 simple for the first time in history, potentially threatening the previous all-time high for the first time in history. I don't like the setup right here. I mean, I wouldn't be, here's my thing is, I wouldn't be looking for a big gap move up to 30K as like my bull case right now. I think it's much more likely that we're headed down. Now, you know, if you say, well, if we're only going to 10K, I'll take 50% downside. and then, 30K is 50% upside. So that's a 1-to-1 risk reward trade. So it's basically just a coin toss. So sure, if you want to just coin toss, do we go to 30K or 10K first? I'll risk 50% of my stack on it. I mean, yeah, there's nothing wrong with that. I mean, I don't like to gamble with crypto. When I gamble, I like to do it on fights. I like to do it at casinos. I like to do it when there's drinks and attractive women and bright lights, and it's more fun that way. But I mean, I get it. Some people don't like doing that shit. They just gamble with, stocks and crypto. I'm the opposite. I'm very calculated, very mechanical with stocks and crypto and technical analysis. And then I, do dumb shit when I gamble sometimes, of course, like anybody. So while we're here, let's look at the monthly. Obviously, the monthly is very, very bearish. We're off to a bearish, again, 4th month in a row. So far, we're at the lowest active monthly price action. I mean, we could rally back up, so it doesn't really tell us much. 12 days, get the hell above 20K Bitcoin or you're in big trouble. And then we know, obviously, the monthly is pointing us straight towards 14K, which was the 2017, 2018 all-time high. That's 14K. That's also our wick from, the mid-2019 rally. So, again, everything pointing us there. And then after that, we obviously have support at these candles here right around 10 or 11K. Also, the bottom of these candles and the top of the other ones. So, again, right around 10 or 11K. So, everything pointing towards like 14 to 10K basically, in my opinion. And again, all bearish momentum, 821 bear cross, just disgusting. And remember, everybody's saying, this is what it looks like when we bottom. This is what it looks like when we bottom. So this is what it looks like when we bottom. No, this is what it looks like when the market is extremely bearish and then we save it from a disgusting bear market. This is what it looks like when the market's extremely bearish and then we just save it from a disgusting bear market. This is what we look like when we're extremely bearish. The question is, are we going to do what we did the last 2 bear markets in Bitcoin's life and save it? Or is this going to get fucking disgusting? Because we don't know the answer to that. We know here we saved it. Here we saved it. Here it's a coin toss. We either save it or it gets fucking disgusting. We don't know which one. But we know we've already come down on the macro to the, 0.5 from the bottom here. There's so much going on in this chart. We've already bounced the 382. So the 0.5 is slightly lower down here. And again, that's our 15K to 16.3 right there. And then our 618s for the 2 levels are at 10.2 and 11.5. But there's so much support along the way down here, obviously, to pay attention to. But, on the macro grand scheme of things, if there was 200 exponential and simple moving averages, we would still be above them. So that would be bullish, technically. But if you try to trade like a bullish monthly chart, just be expected for like 90% drawdowns. When we go to the daily, it is crossed back down bearish. The 821 are bearish again. The 200 exponential and simple are aggressively angled to the downside. Hard sell signal, all red histograms. Clear rejection of the slope line and the 0 line here. Just doesn't look good to me. Just everything crypto was trying to do. We talked about the potential here for that cross up. And then as soon as it rolled over, I let everybody know in the group, it's time to exit. I'm exiting my Bitcoin position. And that was basically right before this disgusting dump happened. So I did take a small loss on that. We do have a hard sell signal now on the 4-hour. We have a bunch of red histograms on the 4-hour. We have obviously a rejection of the 8 and 21. There is a maybe saving grace that the 200 simple has crossed below the 200 exponential. Oftentimes we know that we'll get a new lower low and then that will be the bottom. So maybe we're going to come down here to like 18 or 16 or something, and then that's going to be the final bottom, and that's it. And then we just go up from here. I'm not betting on it right now. I'm very bearish on these markets right now just by how they look. And the truth is they had a lot of opportunity to do a lot of bullish stuff, and they were not able to do anything of substance. All the rallies up, the back tests, all that was all just, textbook rejections. So on to Ethereum. So we still have our Ethereum chart in play. If you watch the deep dive video, we laid out like 2 pretty serious situations for Ethereum, potential possibilities. Actually, there was a bunch of them, but 2 like short to medium term ones. Right now, when we look at this daily Ethereum chart, we basically have a 1 down, a 2 retracement of the 1, a 3 down, a 4 retracement of the third wave down, second leg down. And now here we have topped here. We did a 1, 2, a 3, a 4, a 5. We're coming down. We're doing an A, a B, and then likely a C. And then the question is, once we have that C rally down, do we find support here and go higher? And then actually we had a 1, a 2, a 3, a 4, and then a 5. And we hit our targets up here at like 2,000 to 2,500. Or does this just continue and this is just our fifth wave down and we're headed down here to like somewhere between $600 and $500 roughly? We don't know. We don't know the answer to that, obviously. We talked about some potential setups. If this area held, it did not hold. We lost the ascending support line. So now the next thing is when we come down here to these key support levels, do we come down and find support and rally higher, or do we just continue to march down here? Obviously we don't know, but we have two more situations laid out for potential. But again, the Ethereum chart doing exactly what we expected. Tricked everybody at the last minute that we were rallying up one higher for one more big leg up here. Everybody got super, super bullish at the absolute top and it rolled over. Both times right here. Both times everybody was super bullish right at the top. We roll over. Obviously, it was a trap based on the Ethereum merge, which I don't know. Has anybody been using Ethereum for anything lately? Did the merge change at all? Or, oh, no? I mean, unless you have like a DApp or something, unless you're a developer, probably nothing changed for you. Or a miner, in which case it changed, but it's bad. So yeah, I mean, no surprises here, honestly. I mean, Ethereum's looking rough here. It does have a lot more to fall. If crypto lets go here, Ethereum's going to really be in trouble. It did rally back up here, tested all the moving averages, and now it's testing them all to the downside. If we lose the 200 simple here, 1,286, we likely just return to the lows, about $1,000. Looks like it's rolling over, losing momentum. Obviously had a much more bearish move recently. It bearishly engulfed two candles instead of just one. Ethereum always trying to show everybody up. We already had the bear cross, a clear back test, rejection. After that, we know what's next. After we back test a broken support as resistance, we then retest the lows and likely get continuation. So where is Ethereum headed? Well, we already came down to 1,000 or 1,100. We have some support around like 679. I mean, it's a big fall now if Ethereum decides to take a dive. It could pull a gold. I shouldn't say pull a gold. Gold has potential to head back to like $1,300. Ethereum, the equivalent move would be like $300. So, I mean, I'm not saying Ethereum's going to $300, but I'm also not saying it's not going to $300. But right now, it does look like it is ready to just let go here. Likely headed down to that $1,000 again and test it. And it looks like obviously the momentum is picking up. The 821 cross bullish again here, cross bearish again here. We're below the 200 exponential and simple. Absolutely no reason to be long on Ethereum right now, based on technicals. You can be long on Ethereum because you like robots, or you like Vitalik, or it has a cool name, or you like its little logo coin. You can be bullish on Ethereum because it is fundamentally sound, because it is one of the biggest cryptos. You can be bullish on Ethereum because you're all in on it, and so naturally you're going to root for what you bet on. But you cannot be bullish on Ethereum based on technicals because it looks like shit. But it does still look better than most cryptos, as sad as that is. So Ethereum Bitcoin chart, obviously we talked about this situation here. We spent a ton of time in this downward trend, ton of time in this upward channel trend deal right here. Obviously created a little triangle right here, false breakout to the upside, called the absolute top, came back down, found support, rallied up. We crushed the rally the majority of the way up. And now here we are back testing the 200 exponential and simple. So what's this daily chart telling us? Well, if we stay above this, it's bullish. If we go back below this, it's going to cross back bearish again. So we don't know what's going to happen, but likely, we're at support. Likely we're going to retest the bottom of the range unless Ethereum starts rallying like crazy. Then maybe we test the top of the range. But after the move Ethereum had, and what appears to me on the weekly chart to be, essentially a triple top, I'm not bullish on Ethereum right here at all. I'm not bullish on Ethereum here at all. It seems more likely that we're headed down here to actually potentially break down from the channel. So, what does that mean? Bitcoin's going crazy. Bitcoin's getting crushed and Ethereum's getting crushed worse. I don't know. We will see. So total market cap right here. I want to spend a little extra time on the crypto total market cap Bitcoin dominance in a second here, because I feel like I haven't made a good point about why that chart was so important, but people have been asking about it. So for the crypto total market cap, very bearish. Obviously we rallied back up to resistance, got rejected, bearish engulfing candle, took out the previous 2 weeks before it, and now we're back at or below the 200 simple. That is not what we want to see. The longer we spend in this range, the more likely we are to break down through it. A bloody waterfall to retest potentially the 2017, 2018 highs. It seems like 700 billion is where we're headed to. Now, that being said, there is a reason I'm actually more bullish on this chart than I am on actual crypto. As crazy as that sounds. So maybe 546 billion. I don't know. Very, very bearish here. Very bearish. Rejection almost at the lows. So now let me explain to you why I'm actually bullish on total crypto market cap in comparison. You know, this chart looks very similar to Bitcoin, but I'm actually much more bullish on this chart as opposed to Bitcoin. So first, let's look again at our regular Bitcoin dominance chart. So this is just the percentage of total cryptos that are Bitcoin by dollar value. And then, you know, obviously versus everything else. So Bitcoin is 41% of all crypto, including stable coins. And here we're seeing just multiple retests of the lows, which normally would imply that this is getting ready to break down. As in Bitcoin dominance may actually go lower here, possibly to a new low, implying that altcoins may rally through the moon. Theoretically, that's what this is saying potentially, okay? But let me show you something else that really has me skeptical. I think this chart is lying. I think this is it's a fucking liar. A liar. Okay, here's the thing. And this is what we always talk about the stuff that nobody else is talking about, nobody else has figured out, nobody else is paying attention to, nobody else is watching, nobody else has heard of. We just do the stuff that other people haven't done yet. I like to call it putting in the work. So we go out, we put in the work, and that gives us a massive edge over everyone else. I would have thought by now other people would be on to this edge, but nobody is. So I'm still going to share it with you guys. I think part of the reason why, no, you know what? I don't even think. I fucking know. I know part of the reason, and this is where I failed, okay? I have failed at explaining to you guys why this chart is so important to me. And that's my fault. I apologize for that. You know what? As a matter of fact, I think what we're going to do really quick. Okay. Wait, why did that fuck me so bad? Maybe if I go to the daily, this will work. It's my fault for doing a poor job explaining why this was so important. Damn, why is this not? Can I not get a? Because it's already in a percentage. So because it's a percentage of a percentage, I can't like use this. Damn, there has to be a way to do it. I can't think what the setting has to be for this to actually look right. Damn. Okay, it's not going to work. I'll have to figure out what I need to click to do it. I didn't like plan this out. But essentially, I was saying if we could compare this chart, which this is the price action we're comparing. This was our peak right here from December of 20. And then we see what happened since then. So this is our peak right here from December of 2020. And then we see what happened since then. So part of the reason, and this is where I failed to explain why I wanted this chart so bad, why this was so much more important to me is because we kept talking about, I have mentioned a bunch of times this same point, but I have failed to drive it home. And I know that because of the questions I'm still getting and the confusion. This chart represents two important things. We always talk about being able to eliminate the middleman between like exchanging gold for, bulls or wheat or hookers, whatever, you're going to trade your goods for your other goods, your store of value for your goods. But I keep forgetting or not mentioning or not driving home the point right here why this is so important. Cryptocurrency, part of the purpose of cryptocurrency, which you guys all know, it's super obvious, is the ability for people outside of, first world countries to access banking. People always talk about, banking the unbanked and all that stuff. Well, okay, let's say you do live in one of these other countries, which we all forget about. We're all guilty of, if you're listening to this, you probably live in a first world country or close to it. You're probably well above the poverty line, probably doing quite well for yourself. So we don't think about this from the standpoint of somebody that's in one of these like third world countries or a country where the currency is like breaking down. I mean, Turkey's not necessarily third world, but you know, we see what's happening over there right now with their currency. A lot of people, the reason the dollar is so strong right now, and we know that, is because people are running to dollars. And that's why the dollar has been rallying so strong. And the DXY obviously represents the strength of the dollar compared to all these other currencies. But what we haven't been discussing, or people haven't been taking account for, is that when we talk about Bitcoin dominance, we talk about it as if it's complete opposite polar sides. Like there's only two things you could possibly do. You could either be buying speculative cryptos or you could be buying altcoins. And if you're buying altcoins, you're only buying those altcoins while you're waiting to buy speculative cryptos, because right now the market's bearish. So you're just uninvested in the market. So you're just sitting in altcoins. But that's not actually the case. There's a third case. The third case is, let's say you live in Europe. Let's say you live in the United Kingdom. Let's say you live in Japan. Let's say you live in any one of the third world countries that we didn't just list off. You may want to put some of your money in dollars, either to hedge yourself or, you know, to speculate compared to your own currency. Because obviously if the dollar continues strengthening and your currency is weakening, if you move your money into dollars, you can basically like Forex, like, you know, foreign currency, like exchange advantage the difference. So a lot of people, rather than buying, you know, an index that tracks the dollar, or rather than going to the bank and actually just buying dollars from their bank or exchanging their currency for dollars, whether it's euros or, you know, British pounds or whatever, people are using money digitally through crypto exchanges to purchase dollars. And they're not doing it because they're thinking about buying crypto someday. They're doing it to speculate on the strength of the dollar, which makes perfect sense. Why wouldn't people be doing that? Clearly, people want dollars right now. So why wouldn't people want a cryptocurrency that is theoretically backed and pegged to the US dollar? So there's a ton of speculation going on in Bitcoin, in altcoins, and then there's also a ton of speculation going on in the dollar, which includes stable coins, because it's another way for people to speculate on the dollar through stable coins. Because what are these stable coins backed by? Most of them are backed by dollars, either 1-to-1, or they're pegged to the dollar 1-to-1, even if the peg occasionally breaks, tether. But that is a lot of the money in the crypto space. I mean, I don't know what percentage of it, but when we look right here and we say, hey, if we take out all the speculation on the dollar, aka speculation on stable coins, aka, you know, and what, you know, realistically, if you're speculating on dollars by purchasing stable coins and then you're staking those stable coins, what are you essentially doing? You're essentially, you know, purchasing bonds. Basically, you're speculating on the US dollar and you're getting paid a percentage to lock your money up in that currency. So you're basically just buying bonds. So in many ways, the stable coins are acting like digital bonds, trading at, you know, roughly whatever your staking is, you know, 4%, 6%, 8%, 20%, but you lose all your money. So, I mean, we see what's actually happening in real time, and obviously no one else is making this connection, or we would hear that. I mean, this should be a mainstream thing, explaining why crypto market cap is holding up, why Bitcoin dominance is actually not accurate until you factor out those altcoins, or I'm sorry, until you factor out those stable coins. So again, what I see here is two different stories. Here, it looks like we're getting ready to break down, actually. We're threatening the lows or putting in new lows consistently. It looks like Bitcoin is getting ready to break down and lose, you know, market cap. But here we see the truth. All we're seeing is, well, actually, more people are running to Bitcoin and more people are running to not altcoins. They're running to pegged dollar stable coins. So that's what this chart is showing us. It's showing us that actually the arbitration or the difference between being right here at 50 and being down here at 40 is the amount of that money that's in stable coins. So it's a huge, huge connection that's very important to make, because essentially if you don't realize that, if you don't understand that a lot of crypto right now is actually the strong dollar trade, you may get bent over and surprised, and not in a good way, okay? I'm talking about like the turn around and cough type surprise. You might get surprised if and when the dollar turns south. Because that's the truth. If the DXY is strong right now, if the dollar's strong right now, if there's tons of speculation or investing or, Forex taking place in crypto dollars on the US pegged USD dollar stablecoins, whatever you want to call them, if there's tons of that going on, if and when the dollar does reverse, which could be starting already, it could happen in 3 months, it could happen in 10 years. I don't know when it's going to happen, but when it does, that's going to change the whole spectrum of how all of this looks. And we're going to have to pay attention to how that affects crypto market cap, where that money flows, et cetera, et cetera. Because if we end up and this is where it's important, like if we go back into a risk on environment and you're like, oh, God forbid we didn't realize the money was in the stable coins and now it's in the shittiest cryptos ever. Well, of course, if we go from risk off to risk on. But what if we go from risk off and then dollar weakness? That's like risk off, risk off. Then we have to figure out where that money flows to, because it doesn't flow back to Bitcoin. It doesn't flow back to shit coins. It doesn't flow to stable coins because the dollar's weakening. So then where does it flow to? And that's, our job is to figure that out, obviously, if and when that should occur. But very, very important point. Hopefully I have driven it home. But that's it for my ramblings for today. Well, on that topic, I'm sure I'm going to ramble more. Come on. You know what you're here for. So let me jump in the chat real quick. Yoda says, Cash King is for now. Crypto trend trader wise is level-headed. Kept me. He has wrecked. I got 2018. This time secured my family's future. I have not enough words. I have to thank you, man. I'm glad to hear that, Yoda. Always love hearing your guys' stories and how technical analysis and learning to decode these charts has changed your lives. And I am honestly blessed and very happy to be a part of that. So but congratulations, because you did it all on your own by seeking out the wisdom, or to make those improvements so you don't make the same mistake again, which arguably wasn't a mistake the first time if you learn from it. So congratulations, brother. What's up, Calma Betty? Good to see you. Okay, so let's take a look now. I want to stick to that weekly and pay attention to what these markets are really telling us. This is our weekly gold chart, a new lowest low weekly close. It's at that key support level that we wicked down to a bunch of times. Very important support. It's now at the 200 simple. Remember what happened with the stock market. I was expecting us to come slightly lower to the 200 simple. We bounced the 200 exponential, bounce up, got rejected, and then we're expecting a retest of the 200 simple. Gold is just doing it already. Gold's just like, 3 weeks ahead. Gold is literally just leading the stock market, leading the crypto markets, leading all these markets. So that's the same move I expect in all these other markets. And what is gold telling us? Well, it's rolling over. It's telling us the momentum move that it built on this dead cat bounce is over. All red histograms. It's breaking down from key support, and it's printing the lowest low of the entire cycle. And as a matter of fact, arguably we have not been this low, technically since March of 2020. I mean, that's wild. That is wild. So yeah, I mean, gold again, and we've looked at the monthly countless times. I've sounded the alarm a million times. If people aren't hearing it by now, I don't know what to say. Silver has had a nice rally off the lows, up a little over 10%. That was our daily. On a weekly, basically we have lost that key support. So again, look at this. Silver was just leading the way. We bounce the 200 exponential and simple. We get rejected. We come down to the 200 simple. Breakdown from that. We backtest what was support, and now it's as resistance, and then it rejects us. We go to new lower lows. And now here we come up here to potentially put in another lower high before continuing down to lower lows. Silver trading very textbook. If gold is leading the market by like 3 weeks, silver is leading the market by like, 9 or 10 or whatever. It is trying to build some momentum, but we're underneath the slope line. This to me looks like a back test before lower prices. Now, how low is silver going to go? What's the spot price going to be versus what you actually pay for it? That's all up to you to figure out. But gold silver ratio. So we did take out that low on the weekly close. So a new weekly close on that. It's not that big of a deal until we come up and put in a lower high, because we did put in a higher high right here. If this was our highest high and then we put in a low, then a lower high, then a lower low, it would be the start of a bear trend. But because we came down here, put in a low, put in a new high, and then we put in a lower low, we actually still need to see a push back up and then down before we start trending to the downside. Now, still likely, in my opinion, we go down to like 82, 83, somewhere around there. But to me, this is very bullish. I mean, I would be looking for like the 80s to hold before going to probably new all-time highs on the gold-silver ratio. So GDXJ down at support. We talked about this key level. We talked about some potential moves back to the upside and what that could mean. Again, I'm not like super bullish, just going like crazy right here, just buying into all these gold and silver stocks. But a move back up to the top of the range, 26%. We're at key support of the descending support line, and we're at key support of a macro fib. So if ever there was a time to buy super strong support, including bullish divergence on our indicator oscillators here, this is it. Now, I don't think we had it on the jewel, did we? Slightly lower low on the jewel, on the stochastics here. So we don't have bullish divergence there. We do have it here, though. We do have the blue slope line. So if it does act, we have a lot of support right here. So, man, did we talk about a potential trade setup here? Now, again, I don't necessarily think that these miners are just going to flip bullish or anything. Like, all of a sudden, it's just like bull market on, like, let's go. I don't think that's going to happen. I do not think that is going to happen. But what could possibly, or it seems likely to happen is, and you could argue, well, we already got that move. That was this bounce right here. But that's the move I'd be looking at. You know, basically, you know, if we're putting in new lows, however tight you want to make the stop loss, up to you, because we're at the lows. I mean, if you put it by the new lowest low on the daily candle, you're talking about like a 1% stop loss. So, you know, you probably want to move it out to about 5%, give yourself a little leeway, something like that. And by yourself, I'm talking to me in the third person, because obviously none of this is financial advice. I'm not your financial advice. These markets are extremely volatile. Please do your own research and trade responsibly. So to the top of the move back up here to back test to 0.5, that would be a 26% move, 5% stop loss, 5-to-1 risk reward ratio, back test to 200 exponential and simple. Gold junior miners, you know, ready to skyrocket here or continue to just melt down. Could go either way, but there's definitely some meat on that bone. Oh, you know what? We might not have talked about it because TradingView dumped on us. I can't remember. And then here is our silver juniors, SILJ. Again, very similar type situation. You know, we're at the bottom of this giant macro triangle that we've been trading in forever. We're near the bottom. Now we have seen massive wicks outside of it, like that Rona dump. We talked about if you just couldn't wait and you just had to get in right now, you know, buying in at $9, the risk reward ratio to the top of the range is 66% with a 15% stop loss, that I'd be hesitant to take. This is the real trade setup I like, which is actually we just wait, patiently wait between the 382 and the 618. You know, 618 is the green one right here. The 382 is for the macro fib. We wait and we take a position at like 765. That gives us closer to 75% upside, arguably higher if we were still targeting the 786. But if we just target the top of the channel, 78% upside, 10% stop loss, 8-to-1 risk reward ratio, bearish trade setup. So we need at least a 3-to-1 risk reward ratio. But I mean, it's here. I see it. Now, does this just melt down and go straight to zero and miners are just garbage and nobody wants them ever again and gold and silver are just trash and the whole space just goes straight to zero? It's possible. It is possible. I think it's unlikely, though. And if you're like bullish commodities, this is the move. We've been waiting. We're approaching the area we're looking to load up. We always talk about when things are overpriced and how we don't think that this breakout is going to hold and how we're going to pick them up at much lower prices. And then sometimes what happens is, and I'm guilty of it myself at times, we get down to those lower prices and then we don't take our entries, the targets. I mean, we've been targeting this area for months and months and months, arguably, you know, almost years at this point in time. And now here we are approaching that area. You know, it's harder to pull the trigger now because, of course, it looks bearish as hell. I'm not saying we'll be picking the bottom right here, but there's definitely potential at least for a scalp. GSG, so another just gross close. The daily below the 200 exponential and simple, looking very weak. This is a combination of commodities and energy. Well, it's commodities a little more heavily weighted towards energy. I think it's like 70-30 or something like that, energy over commodities. New weekly close low, or at the close low. That's it. 0 days since, you know, new lows. 0 weeks since new lows. I mean, that's not good. Now, this is still very, very bullish. This chart's still super bullish. Everything's postured bullishly, but we are confirmed in a correction. 821 on the weekly bear market. Clear push up here, clear rejection. Commodities are going lower. Energy likely going lower. I mean, that's what this is telling us. Bearish slope line below the 0 line. Everything else to the downside. Man, I mean, you know, until you look at the weekly charts on these things. Now, a lot of the daily charts do look bearish, but look like they could bounce. Until you look at the weekly charts on some of these things and potentially monthlies, you really don't get the full picture of what these markets really look like. So nat gas, we are seeing that start to roll over now. This is just FCG. I was using it for, you know, a proxy ETF. We basically have a 786 back test from the top to the bottom right here, and it looks like we're rolling over. Again, we have an M topping pattern right here, or a double top scenario. So breaking down below this little area right here likely takes us to 200 exponential and simple. We have obviously our fibs. We could flip one over and go from low to the high as well, but I'll just leave the high to low one for now. It seems likely that we're headed down here to like 23, possibly, you know, start low 20s. I am still bullish on this. It is still bullish long term, but the 200 simple and 200 exponential are kind of fighting here. You know, when we go over to like the weekly chart, we're starting to show some weakness. It's still strong for now, but again, we don't want to see a lower high right here. If we do, we likely get that retest, and what we're actually looking for is basically a back test of the macro 236, potentially down here to the 382. But again, I'm looking to load up because to me, on this weekly, you know, we're confirming into a weekly bull trend. I mean, this has been getting crushed for literally ever. I mean, what? 2008, you know, and a lot of energy peaked in either 2008, 2011, 2014, depending on what we're talking about, you know, uranium, nat gas, oil, all these things, and they haven't put in new highs yet. So if this is the real deal, if we're really in a fucking energy crisis, okay? If there's really an energy crisis, and this is not the case for Europe, obviously, you guys have seen nat gas prices and stuff like that. If we're really in an energy crisis, oil prices and natural gas prices and coal prices will go through the roof if they haven't already, and continue to go through the roof for literally decades to come, when we realize that we have underinvested as a, not even a country, not even a continent, not even, I mean, the human race has uninvested on the most important resource. You know, arguably, what do you need to survive? We need food and energy. So, you know, we've underinvested in one of those things for sure, probably both. So in my opinion, you know, we're looking at this weekly just now getting bullish after being bearish for, you know, arguably 8 years here. We start looking at the monthly on some of these charts. And again, I'm just using this as a proxy for nat gas, but, you know, depending on what company you're looking at, or even just what country you're in, you know, nat gas or various resources, this looks like it's rolling over for now, but I would just expect a back test before a continuation higher. I mean, likely getting, I mean, this thing's going to double. If it returns to new all-time highs, it's like 3-4x, just to go back to the previous all-time highs, rather. So CCJ, Cameco, the uranium space. Obviously, this one's been really, really strong lately. Everybody's super bullish on uranium. I think that's a perfect time for this to roll over. We took profits up here. You know, it scared us a little bit, thinking it was going to run and we're going to have to FOMO back in. Obviously, we resisted the FOMO. It wouldn't have really been FOMO. It would have been buying a new breakout and, you know, continuation, or blue sky, whatever you want to call it. We did roll over, though. So obviously, the case is looking a little better now. Hard sell now on the daily. Multiple red histograms. So it does look like we're going to come back down here and test some of our lower targets. Obviously, we have some various different levels that we're targeting. For the initial move right here, you know, obviously we've almost made it down, back down to the 618. I would think the 0.5 or 382 levels we'll be paying attention to. Again, you could flip this fib and go from, instead of high to low, low to high, and it'd be almost the same. I'm not going to mess with it. It does look like it is starting to show a little bit of short-term weakness. Still very, very bullish long-term, but short-term here, again, this is looking like it's topping out. We're seeing some bearish divergence on the knife, not on the stochastics, because we did put in a lower high right here. Not on the histogram either, if this does continue to roll over. But it seems likely that what's going to happen is we're going to come down here to like 20 or so, you know, maybe a little lower, but somewhere around this range is going to be the best buying opportunity of a lifetime. Theoretically, as this weekly chart looks super bullish. And if we flip over to the monthly chart, this looks pretty damn bullish to me. You know, obviously it's going to take some time for the 200 exponential to get above the 200 simple, but this monthly chart looks about as constructive as it gets for a long-term uptrend, especially as we see the indicator oscillators trending down while price action just goes sideways or up. you know, that's bullish reset on a monthly time frame. So, you know, it could play out. We could go down from here for sure, but eventually it implies that we're just recharging for that moonshot. URA giving us a little bit more clear of a picture, in my opinion, as we have a series of lower highs and lower lows. We're losing a 200 exponential and simple. Looks like it's ready to roll over. And then this is going to give us, in my opinion, a little more accurate weekly time frame. Here we can see a clear high, a low, a lower high, a lower low, a lower high. It would imply that the next step is a lower low, probably a retest of 200 simple. Again, this is my buying opportunity. This is where I'm looking to load back up at, somewhere in between this range here. So we'll see how much it goes down. But to me, that's just one big one up here. 1, 2, 3, 4, 5. That's completion of the 1. We're in the middle of the 2 correction. And then eventually we're skyrocketing up for a 3. And that's what we're really looking for. I'm going to just skip through the rest of these uranium stocks. Just the same thing. We're in this channel. We're melting down. Lower highs, lower lows. On UROY, again, melting down. Back to our entry. So again, good thing we took profits both times. We took a scalp for 24% and not quite 40%. We sold out early, but 24% and, you know, 35% both times. We then immediately came back 100% of the way. You know, not quite yet, but, you know, we're almost there now. So again, if we didn't lock in profits, we're right back where we started, and then we go up, and then we're right back where we started again. Got to lock in those profits, gentlemen, especially when we're in a downtrend. CGC, onto the cannabis stocks, again rolling over. We locked in profits up here at just over $4. We're now back down at $3. So, you know, we gave back the majority of that move already. We did front run our take profit here. We were expecting a slightly bigger push, but again, not going to get greedy over what amounted to, like, I mean, it was like 50 or 60% quick. 50, I think we took profits right around like 52 or 53%, something like that. Really nice move. Really nice move. We didn't even sell the top, obviously, but you know, rolling over now. The rest of the pot stock space looks much, much worse. This one's holding up okay. Daily 821 cross. All longer time frames are terrible. Tilray, Bing cross to the bear side. Revisiting the lows, likely going lower. You guys know my target for Tilray is the new lowest low ever in existence. I want everyone to be a loser first. And then, once everyone is a loser, once everyone has lost on Tilray, and there's no more people that are in a positive position, and we see capitulation come in, that, my friends, that is, for me, a key indication before we go higher. Is Tilray putting in a new lowest low ever. I mean, imagine how that's just going to crush people who just rode it all the way down, rode it back up, and then all the way down to new lower lows again. That's the type of thing that breaks people over years. And who are they selling to? Haha, ya boy. ACB breaking down from that key support line. Again, these charts are just terrible. And then last but not least, we've got cheese, CHZ, USD. Chilies, not cheese. But for me, it's always going to be cheese. So we don't have a ton of price action on this chart. There may be one that's better to look at. But so we got to just go from the all-time high up here down to our all-time low. Obviously, there's some liquidity issues with this. I mean, I don't need to tell you that. It's a new crypto. So, let's be real. I mean, it's not new. It goes back to what? No, it's pretty new. August 21. So it did break down pretty massively. We do see some clear reactions on fib levels, even on the way down. So it was trading very constructively even before we knew this was a bottom. So obviously, whoever the market makers are, whoever's dumping all of this on everyone's faces, obviously the people that control this, because nobody else owns enough of this, I'm sure. They're obviously using key Fibonacci levels. So that being said, we broke down from here. We're close enough to this previous high right here that's our next threat. We need to take out that previous high. We're back on top of 200 exponential and simple, so that is good on a daily time frame. We are a bunch of green histograms. We're coming up on the slope line, and it is blue, setting up for the most epic rejection of all time right before this goes to zero. So that is pretty scary. I'm seeing if we do maybe a resistance. Oh, that's pretty gross too. Okay, so obviously, Big Daddy dumping on your face. Somebody else sees this random descending resistance line right here. So that's a little resistance. The 618 is obviously resistance. This previous high is obviously resistance. Those are the three key things if you're trying to be a bull on the old cheesiest crypto on the market. It is on top of the moving averages, so that's good. Man, I mean, I'm not going to sit here and try to call a top on this one, but that's a pretty clear rejection at an area that clearly got rejected and topped multiple times. So I would be very, very careful if this isn't topping out right now. You know, the key area to watch to the downside is 18 cents. If we break below 18 cents, this thing looks really bad because it's putting in new lows from here. And, you know, again, what it amounts to is came up, put in a high, came down, put in a low, came up, put in so far a lower high. Now, momentum's still in its favor, so it could easily burst to the upside, and that's fine. But if it rolls over right here off of this key resistance, if it rolls over off this rejection candle, if it rolls over off this lower high, you got to be real, real careful if it takes out 18 cents. I mean, we have the 200 simple and the 382 at 16. You have pretty clear support at 12. And then after that, obviously, it's just, you know, the lowest low to ever low. Can't really use longer time frames on this. This looks okay, though. I mean, technically, like not being like overly bearish, because obviously all it's ever done its whole life is just go down. I mean, it's above the 200 exponential and simple, and they're both angled to the upside. So arguably, it's the best crypto in existence, because all the other cryptos look much, much worse than this. Now, what does that mean? Does it just mean it has a lack of liquidity and a couple of big players push it up? Does it mean it's the new cool thing for people to speculate on while everything else is going down because it has a tiny market cap? Does it mean that it's the best crypto and that's why it has the best chart? I don't know. Any of those things, all of those things, or none of those things could be true. I honestly don't know. But it does have a better chart than most. Obviously, right now, though, we have a low. Or I'm sorry, we have a high. We have a low. We have a lower high. We have a lower low. Potentially have another lower high. So if this does top out right here, I would fully expect new lows, which I know it's melted down already quite a bit. I mean, from the all-time high to where we're at right now, it's down 60%. From the lowest low, it was down 87%. So if it goes to a new low, you know, it's basically going to be at 90+% down. Now, you know, maybe you invested in it down here. Maybe you invested in it up here or right here when it got listed on Bitstamp. So maybe you're already really far down or really far up. I don't know. But there's a lot of risk to the downside from this point right here. The real trade, in my opinion, and obviously I'm not trading this trash. I never would. I shouldn't say never would, but I literally have no idea what it is. So maybe it's awesome. But the real question is, you know, if it pushes up here, 38% would be a new highest wick. A new highest close on the daily will be like 30%. And again, realistically, if this tops out right here and rolls over and puts in another lowest high, I would just assume that we're going to a new low. So at that point in time, it's 30% upside potential, 67% downside potential. Arguably, you know, it can't be infinite. So it's somewhere between 67, 68% and 99.9%. I don't know where it stops. Could stop, you know, before that. Doesn't have to go that low. But that's what I would be looking at. The only thing this has ever done in its life, according to this chart, and there may be some chart out there that has like record history and it goes back and it's like just a slow walk up, and this, you know, Chili's crypto has been around since, you know, 2011, and it was like the second crypto after Bitcoin. I don't think that's right, but maybe it is. Maybe that's correct. But I doubt it. So all this thing has ever done its whole life is just go down. So sure, it looks okay right now. It's kind of bullish right now. But it's also, you know, consistently just putting in lower highs and lower lows. So it tells me whatever this is, the only people that control enough of this crypto to consistently be selling it, again, I don't know what this is. Okay, but I know how stuff works. And the only people that own enough of Chili's to be selling is like the founders, the early investors, the, you know, devs. Those are the only people that can dump this much of supply on people's faces. So if they are selling, I mean, they're either like technical analysts and they're, you know, dodging a bear market that they think is impending, which seems unlikely. If they're devs, they're probably focused on, you know, whatever this crypto is. So they're probably selling it because it's either garbage, they're not bullish on it into the future, or technical analysis tells them that crypto is going into a bear market. I don't know, because if they were using technical analysis, they would probably say it's bullish right now. So, arguably, I mean, we'll see. We'll see really quick. We're going to know. If this thing busts out and gets a daily close above 30 cents, it's probably headed back up here to the 786 at 38 cents. If it closes and gets rejected here on the daily below this descending slope line, it's probably just going to start test. I would say probably the 382 is next at 16 cents. So huge range. And we can see the lack of liquidity. I mean, look at this thing. It like literally pumped up. That was a rejection at 24 cents and now it's at 25 something. So we can see it's very volatile. But yeah, I would just be really, really careful in this one. In my opinion, the big risk is to the downside over the reward to the upside. But I mean, hey, we'll see. If it breaks above that level, any of these levels, it's going to start looking good. I mean, obviously from here we have a low, then we have a high. So we have a higher low. So if we put in a higher high, you could say, well, we're starting a new uptrend. We had a downtrend, we're starting a new uptrend. To which I would say, you're correct. There's nothing wrong with looking at it like that. As the optimist, something around like this, maybe. That was our downtrend. Make it a different color. Ugh. Every color is like the worst color. So that's our downtrend. And now we're breaking out right here. So maybe we look at what a measured move would take us to. So basically from the bottom of the channel to the top of the channel. And probably it's going to be either a lower high or revisit the highs. So once we broke out of the channel, which was right here, that would potentially take us back to the 786. So this is telling us maybe, 40 cents is in the cards, but I'd be real careful up there. And then obviously, if this is, obviously it's a confirmed breakout of that descending channel. We can see that pretty clearly here. So depending on how you're looking at this, something along like these lines. I mean, that looks acceptable. So, I mean, it looks like we bounced the bottom of the channel, right here. Obviously, we have a kind of sketchy top of the channel. Maybe it should be a little more like this. So we got a couple touch points on the bottom based on closes. We've got one. I don't like that one because it came in before that, but they're useful at times. Here we have two touches kind of close to each other. So this is what I'd be looking at. Basically this ascending channel. Buy support on the channel, sell resistance on the channel, watch out for the horizontals, and you should be in good shape. I mean, everything else looks like trash right now, and this is rallying. So maybe you know more about, but no, let me correct myself. You definitely know more about Chili's than I do. So if there's something bullish that's causing everybody to rally and get after Chili's, man, by all means. You got some key areas in mind there. So Apple continuing to melt down. We know the target is 140 down here, and then macro target's like 116. I don't know if it's going to get there, but we see what's happening here. Tesla again holding up pretty strong for now. We do have some back test of 211 is the next key target. If it does rally right here, 340, as high as 340, I think it's just a matter of time before it rolls over. Microsoft threatening the lows right here. Very, very gross looking chart. Google, new lows. Very, very disgusting. Disgusting, Google. You embarrass me. Please let me stay on your platform. I mean, don't be me. Nvidia, just new lows, just melting down. Disgusting. Ugh, throw up in my mouth. $103 is our target, obviously, for that one. Meta just melting down. The race to zero, just accelerating to the downside. Target 120-ish area. And then after that, immediately zero. No price action between 120 and zero. It goes from 120, and then all of a sudden, boop, zero. Amazon, holding up much better than most. Still hanging out at that little gap fill area. This is a key area that needs to hold. If it loses this, it's going back down to the lows. See you at $102. Amazon. That's it. We made it to the end. Yeah, hooray, we did it. So we know we got to watch. We know we're looking at those weekly charts. This week is going to be massive. Anything that doesn't print a super bullish chart this week is going to look really bad going into that weekly chart, and then also the end of the month. So this monthly chart is huge. And then also, you know, we're talking about quarter end closes again. Everybody forgets it. Big rebalancing, big stuff coming in. Bond market's been getting wrecked. Treasury's at the highs. We're about to get another rate hike. DXY's been just crushing everything. Everything losing key support levels and confirming downtrends left and right. Getting ready to confirm monthly downtrends. Market's just looking disgusting. And yet people are still bullish. So is this the bottom? Well, no, because everybody's still bullish. Or there's at least a fight. So no, it's probably not the bottom. So yeah, I think that's important. So what does that mean? Big, strong rally Q4? I don't think so. We had a big rally all Q3, basically. Q3 was a big, strong rally. We took advantage of it. So we had 2 months down and then 1 month up. I think probably we're going to get at least another month or so down. And then maybe by the end of the year, we can talk Santa Claus rally. But that's it. You guys know what's coming up. I appreciate everybody that tuned in today. Make sure you smash that like button before you go. If you haven't subscribed already, make sure you get after it. If you want to join the group and get access to these amazing, awesome, fucking life-changing, just thebomb.com indicators, hit me up. Also, you know, it's fun to be in the group together, cut up. And, you know, obviously, bear markets are what separate the men from the, I don't even know, the boys from the men, or the winners from the losers, or the, you know, people who are going to be rich in the future from the people who are going to be poor in the future. The people that put in the work during the bear markets, historically speaking, will do the best long term. Because everybody's trying to rush around and put in work and interested and watching videos and learning and reading books in the bull market. But the best time to do it's in the bear market, because you're watching, you're waiting, you're learning, you're educating yourself, and then you're preparing. You know, we're that gator, just the eyes above the water in the swamp, just waiting for that golfer to get a little too close, and then perhaps that's a wrap. Or, you know, maybe just a little snack. Maybe if there's a little poodle or something. Doesn't have to be a golfer. But yeah, that's it. We're going to wrap up there. I'll see you guys on Wednesday for the live stream, 8 p.m. till, well, an hour, 2 hours, 3 hours, who knows. And then, of course, Friday for the wrap-up, 11 a.m. Eastern Standard Time till probably about 1 or 2. And then, of course, every Sunday as well. But that's it for today. Hopefully you guys enjoyed the video. You learned something. Most of all, remember, none of this financial advice is not your financial advice. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto Trend Trader. That's it for our Sunday evening market look ahead. It is 9:32 p.m. Eastern Standard Time on September 18th, 2022. And I'm out of here. Everybody have a great night. Appreciate y'all tuning in. Peace out.